Thank you, Zico. Good afternoon, everyone, and welcome to the earnings call. We have with us Mr. Tribhuwan Adhikari, MD and CEO, and Mr. Sudipto Sil, CFO from the management team. I would request MD and CEO to give us a brief on the results. Post that, we'll open the floor for Q&A. Over to you, sir.
Yeah, thank you, Praveen. Very good afternoon. Good afternoon and welcome to the post-earnings conference call of LIC Housing Finance Limited. As you are aware, LIC HFL declared its Q2 FY2024 results yesterday. Before I start the highlights of the Q2 results, just like to outline a few developments in the economy over the quarter. RBI kept the policy rates unchanged in its August and October meetings. However, temporary incremental CRR was introduced in August MPC meeting to tighten the liquidity in order to bring down inflation. The inflation numbers during the quarter were slightly higher above the RBI's targeted range. In the October NPC meeting, the RBI governor hinted that RBI could opt for OMO sales auction of GSEC to mop up excess liquidity. Due to the high inflationary pressures and tight liquidity, the interest rates remained elevated levels in the quarter with almost a flat curve. Now I would like to share the key highlights of the results of the quarter. The total revenue from operations of the company were rupees 6,753 crore against 5,086 crore for the corresponding quarter of the previous year, up by 33%. The outstanding loan portfolio stood at 2,77,987 crore against rupees 2,62,336 crore as on 30th of September 2022, reflecting a growth of 6%. Out of this, the individual home loan portfolio stood at 2,34,509 crore as against 2,16,771 crore, up by 8%. And this home loan portfolio comprises 84% of the total portfolio. Total disbursements for the quarter were 14,665 crore against 16,786 crores in the previous quarter last year. Home loans were, during the quarter, 12,516 crore as against 14,300 crores. And project loan disbursement was 433 crores against 407 crores for the same period in the previous year. So project loan growth was, the disbursement was slightly up by 6%. The disbursement for the quarter reflects a 35% growth over Q1 of FY24, though it still remains below the Q2 of FY23. As I had shared in the post-results call of the first quarter on the 3rd of August, initially in the beginning of the year, due to complete revamp of the technology, we had some technology-related issues which had affected the numbers in Q1 and the first month of Q2. But now these technological issues have been resolved, and ever since August and in the month of September and even in October, we are witnessing a month-to-month improvement in the and the trend is pretty much more visible in October, where the sanction figures have clocked an almost 15 to 20% Y-on-Y growth. So I see this as a very positive reflection that of the portfolio growth in the coming quarters, and I believe we should grow at a much higher rate as to what we've been doing so far in the 2 quarters of the current financial year. Net interest income stood at 2,107 crore as against 1,150 crore for the same period in the previous year, which is up by 83%. Net interest margins for the current quarter stood at 3.04% as against 1.78% for Q2 of financial year 23. We have been able to maintain the NIM above 3% for 2 consecutive quarters in a row. PBT for the quarter was 1,480.06 crores as against 378.85 crores in the previous year, registering a growth of 291%. PAT for the quarter stood at 1188.05 crores as against 304.87 crores for the same period in the previous years, a growth of 290%. In terms of asset quality, the stage 3 exposure at default as on 30th of September current year stood at 4.33% as against 4.90% as at 30th September of last year. Total provisions as on 30th September current year stood at 6512 crores, reflecting a provision coverage of 41% as against 44% in the quarter last year. With our continuous and focused efforts on recovery, we have been able to achieve significant reduction in NPA in Q2. Also, in the current quarter, we have also gone in for a technical write-off of 925 crores. All these loans were carrying 100% provision. Recovery efforts were put on maximum focus during the quarter. A lot of focus was on the feet on the street, going and meeting the delinquent customers, motivating them to pay back. And there was a net reduction in stage 3 sequentially without considering the write-off also. Further improvement is likely to come in the coming quarters. And the stage 2 accounts have also witnessed significant improvement with our rigorous recovery and follow-up efforts. On the funding side, the cost of funds, which stood at 7.66 as compared to 7.62, slightly uptick of 4 basis points. Incremental cost of funds stood at 7.73 for Q2 of FY24. During the quarter, the short-term benchmark 364-day T-bill moved from 6.79 to 7.18, and 10-year GSEC also witnessed significant increase in the yields. Despite the increase in the weighted average cost of funds was restricted to about 4 basis points. The company also renegotiated on the existing funding availed from various banks and was able to obtain better pricing. The margin for the quarter is 3.04%. On the interest rate scenario, it's likely that interest rates will remain elevated for a long period of time, considering the inflation situation. So with this brief introduction, I would like to invite you for the queries. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Jain from Tara Capital Partners. Please go ahead.
Hello.
Hello.
Hello. Yeah, hi. Can you hear me?
Yeah. Good afternoon, Mohit.
Yeah, good afternoon. I have 2 questions for you. First one is regarding the overall loan growth. I heard that you said that the system issues have now been resolved and the book is now going to grow at a good pace. So in this situation, are we going to stick to our guidelines of 12 to 15%?
Yes. Our basic guidance at the beginning of the year and even at the Concall of at the end of Q1, 12 to 12%, we stick by the guidance.
Okay, because I think that the ask rate now for the remaining 6 months is going to be almost like 5% per quarter that we need to grow. So we are confident of achieving that number too.
Yeah, Mohit. We do understand that the asking rate has of course gone up because of our slightly lower than expected performance in Q1 and Q2. But we are well poised. We are witnessing significant improvement in the situation. The sanction numbers are pretty comforting, especially in October. Yes, there is a gap of almost 20% between the sanction and the disbursements. So we believe this gap is going to be bridged, and already in October we have witnessed a significant growth. I think this will continue for the next 2 months, and I think quarter 3 will be a good quarter for us.
Okay. Then my second question is regarding the credit cost. So on a quarter-on-quarter basis, it has increased from 50 basis points to 60 basis points. And I guess you have explained that the write-offs were 100% provided cases, so I don't think that will have a clear impact. So what is is it because of seasonality that the credit cost has increased? And do we stick to that original guidance? So, we said that our credit cost is supposed to come down to 40 to 50 basis points because Q1 was already higher at around 70. Q1 was at 50 basis points. This time also it's around 50 basis points.
Yeah, Mohit, I'll ask Sudipto Sil, our CFO, to take this.
Dr. Mohit, actually, if you see the published accounts, then there is a note which we have put. This is basically a charge of 105 crores approximately, 104 crores, which is a one-off, because this is basically pertaining to some of the repossessed assets where we have reclassified from the assets held for sale to loans. So for that, we had made an additional provision of 104 crores net. So if you remove that 104 crores net, then probably the real credit cost charge for this particular quarter will be revealed.
And we don't expect such charges in the subsequent quarters. I think we will not have a lower credit cost.
This is a one-time one-off.
Okay, sir. Thank you.
Thank you. Our next question is from the line of Gaurav Sharma from HSBC Securities. Please go ahead.
Yeah. Hello.
Yeah, good afternoon, Gaurav.
Yeah, good afternoon, sir. So, sir, just a couple of questions. One is I just want to know your incremental lending rate and incremental cost of borrowing for quarter 2. That is one. And second, sir, my question is pertaining to PCR. So, like, couple of quarters we mentioned that we have moved to 50% PCR. Now it has again come back to 42%. So just wanted to know the timeline that whether again we'll be targeting that 50% PCR or it will remain at the current levels only.
Yeah, I'll take the part about the PCR, Gaurav. The PCR has slightly come down. In Q2 it was 42. In Q1 of current year, of the current financial year, it was 41. It has 42. It has now come down to 41. So there has been a 100 basis points reduction. This is partly because of this write-off which we have done. Yes, the RBI mandate is that we should aim for a PCR of approximately around 50%. Of course, we do understand that all our lending is totally covered by securities and mortgages. So compared to the banks, we are slightly, I would say, more comfortable as far as the mortgage, the collaterals are concerned. But still, it is our endeavor. Yes, 41, 42%. We believe as a management, we are comfortable. Yes, we would like to take it up to 50% as mandated by or as requested by RBI governor. Of course, for banks it is, I believe, 60%. I will keep it on the similar levels initially and then scale it up depending upon recovery. Yes, we would definitely like to have more comfort on the PCR side. Would try to attain 50% as quickly as possible.
Yeah, I might add to that. For example, if you actually add back the write-off amount of about close to 925 crores, then we'll actually find that the PCR level is higher than what it is optically shown here. Number one. Number two is that we are expecting improvements on the recovery front, which will automatically reduce the outstanding NPL size and amount, and that itself will lead to an improvement in the PCR otherwise also.
Yeah, well, just to comment on that, on the recovery front, yes, there a lot has been done. We've really hit the streets. Our team is already hitting the streets in a big way, approaching customers. We are also exploring whatever options we have, the legal options we have. We are exploring all of them. So, in fact, everything is going in together. There has been a significant improvement in the recovery effort in the quarter. Yeah, receivables part, we are also doing well. Now, the only thing is that, yes, two issues. There are large, what we see in the horizon are a few big cases. Project loan has been our Achilles heel, if I may say that, almost 40% NPA in the project loan side. Yes, we are targeting the big cases, and a lot of the cases are in NCLT and IBC. We can see a few big cases coming to resolution in the horizon. So that, and of course, we are also pursuing the OTS route aggressively. And yes, one thing which I had said in the first quarter, that we were exploring the ARC route. So long until the end of the first quarter, we had not explored or not ventured into the ARC route. In the current quarter, yes, we have taken a pool of loans to the ARCs, who should be coming back to us shortly. So, taking that, I think in the remaining part of the quarter, in the coming quarters, we are going to go aggressively and take the ARC route for the lumpy and sticky loans for which we see no resolution.
Understood, sir. And on question number one, that is incremental lending rate and
incremental lending rate and cost of borrowing.
Yeah. See, incremental cost of fund is around 7.73. And incremental lending rate with everything put together is, largely now, as you've been knowing, largely it is in the retail side that we are lending. But if you aggregate with a little bit of project loans and other assets that we are doing, it is around 9.4 roughly.
Sir, incremental cost of borrowing, I was asking. Actually, incremental cost of fund you have mentioned.
7.7 to 7.73.
Okay, so it is same as incremental cost of fund and incremental cost of borrowing are at same rate, right?
Yes.
Okay, sir, got it. Thank you, sir. That's all my two questions. Thank you.
Thank you.
Thank you. Our next question is from the line of Raghav Garg from Ambit Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. Just a couple of questions. One is, what was the disbursement amount for the month of September?
Acha, one question only, or do you have some more?
Yeah. So my other question is with respect to last quarter you had spoken about some NCLT recoveries. I think you just touched upon it in the previous question. If you can provide some timeline as to when can one expect that these recoveries or resolutions would materialize and we would see some benefit. And then my third question is, what is your margin outlook for the second half? Given that we're already trending above 3% for the first half, something that we haven't seen in last many years, what would be your expectations as far as margin is concerned and whether we can sustain at this level or not? Those are my three questions. Thank you.
Okay. Yeah, Raghav. The first question was about disbursement figures for September. September, the total disbursement was 4,813 crores as compared to 5,509 of last year. Yes, there was a slight degrowth. So this was it. Coming to NCLT, as I said, NCLT, this is a legal framework. Yes, from the current status of the cases, we see in the horizon that these cases could get resolved and resolution could come through probably in 2 to 3 months' time. But again, legal, you can never predict what is going to happen on the legal front. So yes, we do see some big cases. There are we are in talks with various other big delinquent borrowers, especially on the project loan side. They are evincing interest in OTS, which we are following up. So that also we see a few good loans coming, getting resolved. Overall, if I may put it to a figure, I believe somewhere in the region of 400 to 500 crores of sticky and lumpy loans which are existing in our books today. I expect them to to be resolved rather, not come up, to be totally resolved in the current quarter. Now, coming to the NIM, yes, the NIM is at 3.04% in the current quarter. Yes, as 3.41 in Q1. But that was, I believe, as I said in the Concall of 3rd of August, I think that was the peak. 3.41 was the peak, and I had clearly indicated that we would not be able to sustain it, and slowly we expect the NIMs to come down, and that is precisely what has happened. So from 3.41, we are at 3.04. The guidance we had given you was in the region of 2.6, 2.5, 2.6. Yes, I think I still maintain that guidance, and I think we should be able to achieve the guidance of probably 2.6 to 2.8 in the current financial.
So just one follow-up question. So September disbursement is about 4,800 crores. And if you look at for the full quarter, that's about 14,700, almost 15,000 crores.
Yeah.
Earlier during the call, you had mentioned that disbursements have been picking up month on month. So this, 5,000 crores of disbursement in September versus 15,000 for the whole quarter, it doesn't sit right when you say that there has been monthly improvement or month-on-month improvement. Can you explain a bit more on that?
No, if I go by, if I just give you a figure, I don't have the exact figures, but if I tell you, July was around about 4,500, right? August also, I believe, was somewhere near that. So compared to that 4,880, some progress we are seeing. If you look at the figures in Q1, it was 3,000 for, I believe, 3,000 around about for April, and for June it was around about 4,000 odd. So looking into those numbers, I see an improvement. And another factor which I am also considering is my sanctions, right? I believe right now my sanction to disbursement ratio is around about 80%. That means what I am sanctioning, only 80% of them I am able to disburse. I expect in this quarter this to be much higher. That is what we've been after with the marketing teams. And I believe with the first festive season around the corner and some special, I would say, festive offerings which we have given to our customers, special rates, etc. Definitely, I am very optimistic about the business part of it in Q3.
Sir, would October disbursements be lower than September? Would you say that? Or
No.
Or would it be materially higher than September?
Definitely, it will be higher than September. My September disbursement figure was 4,813, as I told you, right?
Yeah.
And October, I would definitely expect. October is already over. October disbursements are about 5,000. I don't have the exact figure right now. It is 5,100 something. Right. So there has been an improvement in that. And October, I see a significant increase in the sanctions. There's a 17, I think it's 17 point something. I don't remember exactly. 17% growth in the disbursement year on year.
Thank you, sir. That was all from my side.
Yeah, thank you.
Thank you. Our next question is from the line of Nischint Chawate from Kotak Institutional Equities. Please go ahead.
Hi. Just one question from my side. If I look at the GNPL, we have seen almost a 1,700 crore sequential decline in GNPL. I believe 900 odd crores comes in because of technical write-offs. What is the balance?
Actually, the technical write-off on the principal side is around 925 crores. There is also an element of some reduction. This is also a write-off which is pertaining to the income on the stage 3 assets.
So can you give a pick-up in terms of what it is? If you can just sort of, help us reconcile 1,600 and 900.
Sorry?
Can you help us reconcile?
900 crores to 7 loan accounts on the project side, which itself is around 699 crores, or you can take 700 crores. The balance 225 crores pertains to a good number of retail accounts.
No, the point I'm trying to make is... Hello? Yeah, the point I'm trying to make is that can you reconcile the 1,600 and 1,675 and 900? What is the difference? I think that's what I'm saying.
Actually, as I told you, 925 crores pertains to the principal portion of the loans written off. Then there is also an amount of interest which was there in the EAD, that is the exposure and default. That is close to around 500 crores. That has also been written off.
Mm-hmm. And then that balance could be some recovery?
There is some actual recovery on ground.
And how much would that be?
Maybe around 200 to 300 crores approximately.
Perfect. Thank you. That answers my question. Thank you.
Thank you. Our next question is from the line of Kunal Shah from Citigroup. Please go ahead.
Yeah. Sorry to take forward that question. So in terms of the recovery or actual improvement in stage 3, that seems to be like around about 200 or maybe stage 2 plus stage 3 is that amount. Last time we highlighted that we will see unwinding of the part of stress which was there due to disruption. So is there more left for Q3 and we should see the further improvement both in terms of stage 2 and stage 3? And similarly with write-off, is it largely done or we will see more write-offs coming into Q3 and Q4 as well?
Yeah. The first part of the question, the actual improvement we will get to see in stage 2. The stage 2 is actual improvement which upgrades to stage 1. So that is something that you kindly note. That is one improvement which is there. Actual recovery from stage 3 accounts, complete recovery through closures, etc. That also, as I mentioned in the previous answer, that also is there. As far as the write-off is concerned, now these accounts which have been written off are the ones which have been fully or wholly written off. Now the size of this obviously will not be every quarter. It will not be such a big size, but some small, some few hundred crores of accounts which have been fully written off, fully provided for, 100% provisioning, that will keep on continuing. Because these are only technical write-offs and the follow-up action, legal action, NCLT action, everything continues as it is.
Okay, but that quantum would be hardly like 100 or so, not to the extent of like...
If you see, actually for the last 3 quarters, I think we had not done any significant write-off. So you can say to some extent that this is also some kind of a pile-up of last couple of quarters, at least.
Okay. And reduction in stage 2, you are highlighting that is more in terms of upgrades into stage 1 rather than flow-through in stage 3.
No, this is upgrade to stage 1.
Okay. A larger part of the reduction which has been there in stage 2 assets.
So stage 3 has been, stage 3 even without considering the write-offs that we discussed, even without considering the write-offs, there is an improvement. Stage 2, there is an improvement in terms of upgrades to stage 1.
No. Okay, because if I look at stage 3 purely, the difference, and if I add on to the maybe the write-off, then there is some increase, maybe not much, but 120 odd crores kind of an increase which is there in stage 3. So just wanted to get whether it's more go through from stage 2, yeah.
There is actually an increase in, there is a reduction in the stage 3 by approximately around 100 crores.
Okay.
150 crores also.
Okay. And secondly, in terms of the repricing, so now given that growth is also around about 6% 1% sequential, has there been a lot of repricing requests which are coming in, and then maybe we are pricing it lower? So would there be some proportion, because yields have also come off during the quarter? So any particular portion of the book wherein we saw the repricing lower in this quarter?
Yeah. Well, if I let me clarify this. Well, I told you that in Q1 we had gone in for a total technological upgrade, and due to that we ran into some problems, some challenges. One of the challenges was rewriting. So in Q1 there was literally no rewriting option available to our customers. So resultantly Q2 the entire rewriting, in fact in Q1 the rewriting was zero. In Q2, the rewriting was to the tune of 9,291.55 crores. So there was a huge impact of rewriting, which probably affected our margins.
Okay, that was on 9,000 crores of a book, 95.
Yeah.
Okay. And this would have got repriced to what extent? Maybe people are bargaining for 50, 100 basis points. How would that be?
Yeah. Of course, it depends on where they were. The repricing would be probably in the region of 9%, 8.75 to 9%, approximately up to 200 basis points repricing would have taken place.
Okay, 200 basis points repricing. Okay.
That is the range.
That is the range.
That is not the average.
Yeah, got that. And now, just last question in terms of margin versus growth, the preference would be more in terms of sustaining the margins rather than growing, or maybe now we will see the uptick in the growth as well at some cost of margins, because now it is settling at more than 3%.
Yeah, agreed. This is an option's choice. You go for growth or go for margins. Yeah, exactly. But no, I think we concentrate on growth. We concentrate on growth. We would be looking at getting the margins as well as showing growth, because we need to grow the loan book. That ultimately would translate into better margins.
Okay. Thanks and all the best. Yeah.
Thank you. Our next question is from the line of A.M. Lodha from Sanmati Consultant. Please go ahead.
Good afternoon, sir. Am I audible, sir?
Yeah, you're audible, Lodha. Good afternoon.
Sir, there is one small request. You just simply file a letter to the exchange where the presentation has been uploaded and press release is uploaded on the website. We had to go to the website, and all other companies are filing the presentation and the press release direct to me. And beside uploading on the website of the company, they are filing, annexing the presentation and the press release to the stock exchange directly at NSE and BSE. So investor can have easy accessibility to the press release and the presentation instead of going even in your letter. The letter does not have that green line which we can push and go to the website. It is just a photocopy of the paper enclosed in the filed in the stock exchange. Nothing else. Number one. Number two, sir, this is my suggestion. I trust the management will take care of that, filing the presentation directly to the company, directly to the stock exchange, besides uploading on the website.
Yeah, okay. We'll take note of it and see how it is to be.
Every company is filing, sir. Every company is filing presentation and press release directly to the stock exchange along with the letter. Here is the presentation of the company and the press release in regard to the second quarter results.
Okay, sure, Mr. Lodha. Point taken.
Second, my request is, sir, with this company, I am quoting your this paragraph of Mr. Adhikari from this commentary on this press release. The demand continues to be robust as the overall economy is doing very well. Sir, I am telling you, each and every small finance company, each and every Can Bank Finance and every home finance company has grown more than 10 to 15% in the quarter and in 6 months. Whereas LIC Finance actually there is a degrowth in the loans. In quarter 4, these loans have been 12,000 rupees against the 14,300 crore. And in 6 months, the disbursement is 25,000 crore and 31,000 crore. What is this? This company is working like a Sarkari company. We know it is a Sarkari company. But that doesn't mean that we would work like a Sarkari company.
No, Mr. Lodha, I completely disagree with you. We're not working as a Sarkari company.
This is the query.
Yeah, what exactly would you want to know? Yes, I
wanted to. There is degrowth in the loans. You see the pace of the housing. You see the pace of the home loans. You see the pace of the economy. Even housing is being sold briskly. Even tiles, even every housing material is being sold briskly. And there is a degrowth in the company in the quarter and the half yearly in the disbursement of the loans.
Yes. Mr. Lodha, I agree. There has been a degrowth in Q1 and Q2. We have explained it earlier also. Yes, Q1 we had some major issues with the technology and resultantly...
Q2, sir, also is also in degrowth.
Yes, the effect it is, Mr. Lodha, you would understand that things do not set right immediately. And whenever there's a disruption in one quarter, it takes time to settle down. So Q2 has been better than Q1, but of course I do concede there's a degrowth. Let me assure you, in Q3 you will not see any degrowth.
Please do something for the betterment of the shareholder, sir. Thank you very much, sir.
When we meet in Q3 at the Q3 Concall, you will have neither the complaint about the upload of the presentation nor about the business.
Thank you. In the interest of time and fairness to all participants, may we request participants to limit their questions to 1 or 2 per person. Should you have a follow-up question, we would request you to return to the question queue. Our next question is from the line of Aniket Kulkarni from BMSPL Capital. Please go ahead.
Yeah, good afternoon and thanks for the opportunity. I had a couple of questions. So firstly, let's say in a hypothetical scenario that interest rates do come down by 100 to 150 basis points in FY25. So if this happens, then how will the NIMs look versus the current levels? And secondly, do we expect to maintain greater than 15% ROEs in the next couple of years? And if so, what will be the reasons behind it? These are my 2 questions.
Yeah, sorry. What was the last part of your second question? I just missed it.
Yeah, so the second question basically was
about ROEs.
Yeah, so do we expect to maintain the greater than 15% ROE for the next couple of years? And if so, what will be the reasons behind it?
Yeah, actually, the first part, your second query regarding the ROEs. Obviously, we have made significant improvements as compared to last year, and our targeted levels of ROE are always in the range of around at least 16 to 18%. Right now, we are at 16%. So that will be the management focus without any deviation or any diversion. That will certainly be a management focus to maintain ROEs. And we can say that we are in a position to maintain at least a decent level of ROEs that we are currently holding right now because of improvements in the ROAs, structural improvements in the ROAs that we have seen, and also because of the fact that progressively going forward, at least 25 to 30 basis points of credit cost has reduced. As compared to last year also, you can say that around 25 approximately 25 basis points of credit costs have been reduced. So that will certainly also add to at least 2 percentage points on the ROE. Now, your first question is regarding the situation of interest rate reduction. Of course, interest rate, nobody can predict. It can go up further, it can come down or remain wherever it is. We have seen in earlier cycles also that during the reduction in the interest rates, we have been able to utilize our AAA rating to borrow much cheaper from the market as compared to any other player. So that situation remains unaltered. In fact, slightly better off now, because right now, if you look at it, we are the largest housing finance in the country with a AAA consistently for the last 22-23 years. So that certainly gives us a benefit or advantage in the bond market.
Yeah, so will the NIMs be maintained at, let's say, the current guidance of 2.6 to 2.8?
Obviously, in our Q1 call also, we said that 3.2, 3.21 NIMs, whichever we had shown, that is certainly on the higher side, and it's a peak. And we have, our MD just had indicated that at the beginning of this year, we were looking at a NIM range of between 2.4 to 2.55. Right now, we feel more comfortable or more confident in looking at a NIM range of between 2.6 to 2.8, which should be maintained.
Okay. Yeah. Thank you so much for answering my questions, and best of luck for the coming quarters.
Thank you.
Thank you. Our next question is from the line of Gaurav Jani from Prabhudas Lilladher. Please go ahead.
Yeah. Thank you for taking my question. One is, this quarter we have seen higher repayments of about 13,000 crore if you had to back calculate the numbers. So any particular reason for this? I mean, why is this number higher?
Yeah, we have seen some lumpy project loans getting prepaid, especially towards the end of the quarter.
Okay, and sir, could you split as to, between the repayments as to what would have been between individual housing and, project loans?
Right now, I do not have the full numbers, but I can share with you that overall trend, if you look at the repayment plus prepayments put together, lump sum prepayments rather, not the repayments. The prepayments is around 10.3%. It generally varies between around 9.5 to 10.5 range. That is what we have seen over the last few quarters.
So, no, sir, what I'm trying to understand, sir, is that, is it because of the competitive intensity from banks that we are losing our customers?
This was, as I mentioned, there was a one-off large builder account which got closed.
Okay. So, can you provide the quantum or?
If you see the builder loan portfolio, which is there in the present, you'll see that shrinking. Despite some increased disbursement, it has shrunk. That is the reason.
Understood. Secondly, MD sir mentioned regarding an ARC, resolving lumpy accounts through the ARC route. So this would be over and above the resolutions of 400 to 500 crore that he mentioned in Q3, right?
No, can you come again, Gaurav? ARC.
So you did mention about resolving lumpy accounts through the ARC route, right?
Right.
So just want to clarify, would this be over and above the 400 to 500 crore resolutions that you're looking at in Q3?
Yes, definitely. This is over and above the 400 to approximately 500 crores of resolutions which we see coming up in the horizon from NCLT and a bit from OTS also. As I said, ARCs, we had not yet explored ARCs till now. It was only in the second quarter that we have taken up a small pool to the ARC just to test the waters, if I may use the word, just to test the waters. And I think they should be coming back shortly to us. And going forward, we intend to take it up in a much more serious way. So definitely ARCs would be an option we would be exploring to resolve our lumpy and sticky loans where we see no resolutions coming forth.
So, just to clarify on this, right, could you provide a runway as to what's the targeted pool of these lumpy loans as well as the total quantum, and what's the total provisioning on these loans? I mean, have we sort of put our head to this, or we'll just take it forward as it comes?
As you said, this is something new field where we are entering into. We just entered into Q2. Right now, we've taken about 15-20 accounts to the ARCs. So we've not really put our heads. We're looking into. We are trying to go through the first pool which we have put up, and let's see how it goes. And I'm pretty optimistic it will go well. And once it goes on, and then we really put our heads.
Sure. Understood, sir. Thank you. That were my questions.
Thank you. Our next question is from the line of Varun from Kotak Securities. Please go ahead.
Hi, sir. I had two questions. Yeah. First one is on data keeping, which is regard to the segmental NPA. Could you give the details of that? And the other one is on the bridge between...
Varun, could you come again? We couldn't get you.
Okay. There were two questions. The first one is on the segmental NPAs. If you could give the details of segmental NPAs, developer loans, LAP and all. And the second question is on the bridging of gap between sanctions and disbursements. You said there's a 20% gap that is going to be bridged. So what are the factors driving this? That's my question.
Okay, I'll ask the segmental NPA. I'd request Fizzu to take it.
Yeah, segmental NPA for the individual home loans as on 30th of September is 1.17, stage 3. Then for the non-housing corporate, which includes the project loans, it is 35.48. For the non-housing individual, it is 7.13. These are the stage 3 as of 30th September.
Yes, thanks, sir. And regarding the sanctions?
Yeah, well, I'm happy with that.
Yeah, the second question was on sanctions. The bridge between sanctions.
As I said, right now our sanction to disbursement ratio is only 80%. 80% of what we have sanctioned has been disbursed. And your question, I believe, was how do we bridge the gap? How do we bridge the gap, right? I think we need to be more aggressive on the thing. We really need to reduce the TAT because all the files moving from the area office to our cluster offices which have newly opened. Yeah, one more thing, these cluster offices are newly opened in this current financial year. So again, in the beginning, we had some issues as regards the functionality of these offices. These have been taken care of. Now I think we really need to focus on reducing the TAT and ensuring that the TAT between the sanction and disbursements are reduced.
Okay, so thanks.
Yeah.
Thank you. Our next question is from the line of Jigar Jani from B&K Securities. Please go ahead.
Yeah, hi, thanks. I joined the call a bit late, so apologies if you've already answered this. But what would be the sustainable level of NIMs, say, in FY25-26 once this entire repricing benefit kind of flows through? And what kind of sustainable credit costs are you looking ahead also, probably, say, in FY25-26?
Yeah, as far as the credit cost is concerned, we had indicated that around 50 basis points for the current year by ballpark, 50-55 basis points ballpark in the current year should be maintained. You are asking about 2025?
Yeah. So normalized, say, ROAT, I'm just trying to figure out what would be the normalized credit cost going ahead.
Going forward, beyond 24, that is, right?
Yeah.
Yeah, that should come down. Credit cost should come down. Right now, probably the way it has come down from 78 basis points to around 56 basis points in this first half of the year, it gives an indication that probably it will come down further, at least around 10-15 basis points going forward in FY25-26 looks very much achievable. That is as far as the credit cost is concerned. Then your second question regarding the margins, right? Your first question was regarding the margin, sustainability of the margin. The sustainability of we have discussed in the beginning of the call also. When we had started the year, we were looking at increase from last year. Last year itself was an increase over the previous year. So last year, we had delivered a margin of around 2.29 in FY22. FY23 that got elevated to 2.41. And from the beginning of the year, we were confident of delivering around 2.55 thereabouts. Right now, what we are looking at current financial year is around 2.6 to 2.8 should be comfortably and confidently. We are confident of delivering in that range. Going forward, FY25, assuming the interest rate scenario remains where it is, I think we should be able to comfortably hold on to those levels.
Okay, understood. Okay, thanks so much. Those are all the questions.
Thank you. Our next question is from the line of Shubhranshu Mishra from Phillip Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. Can we speak on the login to sanction ratio and then boil down the sanction to disbursement ratio so that we can figure out what is the rejection ratio? So are we just about not rejecting anyone, especially when we are in a down cycle in credit right now, especially in the lower ticket sizes? So if we can speak on that, thanks.
Yeah, Subhanshu, well, honestly, I do not have the login figures with me because logins could be anything from a financial login or just a request. He could be logged in. What we look at in the company is what has been sanctioned and what has been disbursed. So that is what our focus is. Login is yeah.
And if I might add, your query regarding whether we are not rejecting, question doesn't arise because all lending is based on CIBIL score. The question of rejecting or accepting a weak credit doesn't arise itself when there is a basic threshold of a credit score below which we don't accept any loans. Whether it is
what is that threshold?
Rejected.
What is that CIBIL score threshold, sir?
Our 80% of the business gets done at a CIBIL score of 720 plus. 80% of the business, and below 650, no credit score is accepted.
Below 650, sir?
Yeah.
Okay. And sir, what is the business as usual sanction to disbursement ratio? Say 2-3 years ago, pre-COVID, what was this ratio, sir?
In the 90s. It was close to around 90, 85 to 90.
Sure, sir. Thank you. These were my questions. Thanks.
Thank you.
Thank you. Our next question is from the line of Puneet from Macquarie. Please go ahead.
Hi, sir. Am I audible?
Yeah, you're audible, Puneet. Yeah.
Yeah. So on the yield front, 1Q we witnessed a 15 bips increase, and this quarter it was a steep decline. So what will you attribute this to? Because since all the loans are floating, they can't. Is there any one-off? Is there any interest reversal? Can you just elaborate on that?
No, I'm not able to.
No, Puneet, we couldn't get you. Could you be a bit more explicit?
So in 1Q, you witnessed the yield uptick of 15 bips, but now on an overall basis in 1H it's like 10 bips down. So what caused this? Because but for peers we are not seeing any decline in yields for HFCs at least, right? So if you could elaborate on that.
No, I think that is something that we just discussed just a few minutes back, that there were some repricing requests from existing customers.
Yeah, so you said that the 200 bips repricing should have taken place for the most of the customers, but because of the system issue...
and there is another reason which also we discussed, that some builder loan got closed, and obviously you would be knowing that builder loans at a higher rate of interest.
Right.
So it is two things that existing book customers requesting for a lower rate of interest, and as a retention strategy and being good customers, we retain them. And there were some lumpy accounts which were in the high yield bracket which got closed.
Right. So just from a perspective, this 200, I think next quarter this will take place, right? Because the system issues are sorted. The next quarter we'll again, on a sequential basis, we'll witness an uptick, right, in yields. If I'm getting my understanding right.
No, actually, I'm not able to understand. If you can kindly...
The repricing that you said, the 200 bips repricing that you were not able to do because of the system issues that you have. Yeah. Now, since the issues are resolved, next quarter this will take place, right?
It already started happening in Q2.
Yeah. Okay.
Q2, it's already happened.
Now, Puneet, just let me clarify. In Q1, we had no rewriting, so naturally there was a huge spillover into Q2, and I gave you the figures that 9,291 crores of business got rewritten. And so this was the overall rewriting, not on an average, but it was around about a reduction of 200 basis points. That did affect our margins. Now that the technological issues are over, as I said in the beginning, the rewriting will come back to normalcy. It is not that rewriting won't happen, but they will come down to normalcy. It will definitely not be 9,000 crores in Q3. And it should be somewhere on the region of maybe 3,000 to 4,000 crores.
Got it. Right.
Yeah.
Okay. Yeah. Thank you so much. Yeah.
Thank
you. Our next question is from the line of S. Rosani from SV Rosani. Please go ahead.
Hello.
The line for Rosani has been unmuted. May I request you to unmute your side? So maybe I request that we move to the next participant as there's no response. Our next question is from the line of Hardik Shah from Goldman Sachs. Please go ahead.
Hi, sir. Thank you for the opportunity. Am I audible?
Yeah, you're audible, Hardik. You're audible.
Yeah, sir. Can you give some color on the loan transfers in the quarter? What is the usual run rate, and are you seeing any increase there?
Loan transfer.
Balance transfers, you mean?
Balance transfer, yes.
BTs,
yes.
right?
Yes.
Yeah, in the quarter, BTs were about 2,300. The exact figure is 2,396.65 crores.
Okay.
Yeah.
And this is the pool to which you had also offered a retention rate, but they still moved out. How does it usually work?
No, it could be a host of factors. It's not a question of us offering a retention rate. Yes, some of it I would agree would have been slightly because of the technological issues, customers having some issues with their loan accounts and probably not being very satisfied with us. Yes, that could be one of the reasons. And of course, the other reason is the competitive pricing being offered by competitors. So that always happens. Of course, 2,300, almost 2,400 crores got taken over. We also took over about 1,200 crores. Yeah, agreed. The gap between the takeover from us and the takeover by us is about 1,000 crores, 1,200 crores plus. But
is this rate higher than before, or is it business as usual?
See, actually, if you look at the steady state BTs, it has more or less stabilized at around between 3% to 4% on the portfolio on an annualized basis. So this number just shared with you, that also more or less works in that range, around 3.3%. So over a period of years, it has stabilized, but as MD mentioned, there was a spike because of the technology-related servicing issues, which hopefully going forward have reduced.
Yeah, I see a reduction in this, or rather, let me use the word. I see a reduction in the gap in turnover from us and turnover by us.
Understood.
From us and by us.
Thank you, sir.
Yeah, thank you.
Thank you. Our next question is from the line of Vipul Kumar Shah from Sumangal Investment. Please go ahead.
Hi, sir. So, what is this technical write-off of 925 crores? I'm still not able to understand.
Well, Vipul, is like this. These are all NPAs which are 100% provided for. So that means a provision of 100% has been made against each one of them. A technical write-off basically means that it gets written off from my books of accounts and the balance sheet. Balance sheet gets cleaned, right? So they are reduced from the NPAs as well as the portfolio also gets reduced by the same margin.
And also the provision.
And also the provision gets released.
But at the same time, they remain on the ledger, so the follow-up action, legal action, SARFAESI action, whatever is happening, that continues.
Okay, so that gives you the chance to recover, right?
Yes. It is there in our. I would use not books. I will not use the books because it has been it has been taken off the books. It is there in our loan ledgers. It continues to be in our loan ledgers, and the follow-up action for recovery, the legal action for recovery, the OTS action, and even the ARC action, options are available to us.
And sir, my second question pertains to project loans, where we have NP of around 35 to 40%. So what is the logic of continuing with such type of loans where every 1 out of 3 rupees lent becomes NPA? So I simply do not see any logic to continue this business.
Let me give you a perspective on this. Our project loans, I agree, the delinquency ratio is almost 35-40%. But in the last, if I look at my project loan disbursement in the last 5 years, or 5 financial years, if I may say, our delinquency ratio is only 5%. So basically, these are all loans given earlier to 5 years, which have turned bad. So honestly, I would not say that project loans as such are bad. Yes, probably in the early stages when we started doing project loans, probably our diligence was not proper, or probably we did not have the proper the strategies and the SOPs in place. So that could be one of the reasons. Yes, we are very wary on the project loan side. We are not going whole line and sinker into the project loan. We are being very choosy about when to lend, where to lend, how much to lend. But it is definitely an option. We are not writing off project loans as an option.
Thank you. Ladies and gentlemen, that was the last question of our question and answer session. I would now like to hand the conference over to the management for closing comments.
Well, thank you, friends. Thank you to all of you for the Concall. I believe we've answered most of the questions you put to the best of your satisfaction. Yes, Q2 is over. We are looking forward to Q3. Festive season is around the corner. Festive season always brings enjoy. And we are also pretty optimistic about our performance, the performance of LIC HFL in Q3. All the issues which we had as regards technology, as regards restructuring, they are now in the back burner. And I definitely am very, very optimistic that from the business front, where we are slightly on the back foot right now, I think we are going to rebound back in Q3. And as some of my friends said, the negative which you see in the business front, that will be eradicated. So thank you all once again.